Most of us begin our financial journey by chasing freedom through money. Yet the chase enslaves us to a system where rules don't apply to those in control. Instead, we're imprisoned by paradox and forced to navigate the system to survive. Yet for most, the way forward pushes us into a predictable box. A 9-to-5 with two certainties, a dependable paycheck and no sudden chance of retirement. It's safe, but that safety costs most of your life. The constant steady structure forces obedience and the belief that taking action jeopardizes stability, which blinds people to the risks of comfort. For some, investing can be a lifeline. Many avoid it, fearing the risk of loss, when the real danger is never discovering the cost of safety.
See, it's all risky.
Chaos is the natural order of finance, maintained by the illusion of authority. If everyone realizes the system is flawed by design, people might not comply with the system. Its flaws are kept secret because they have the power to free people, and if enough people were freed, the system would collapse. Systemic misdirection is essential to the matrix, so by design, most people feel helpless in controlling their financial destiny. The idea of allowing the banks to take risks for them is only a comforting thought because banks like to keep people ignorant about finance, so when they lose the money, they can blame a scapegoat and caress your mind with jargon until you're happily sedated, leading you to your demise. The paradox of risk is that we are never free from it. The more we try to control every detail, the more variables appear. Playing it safe and taking risks trade one risk for another, so while feeling in control is comforting, the control itself is an illusion. Expectations shape our reality, and over time, reality shapes our expectations. The dynamic creates a perpetual feedback loop known as reflexivity, and on a large scale, it can shift paradigms. True autonomy within these moments begins with self-awareness. With it, we will navigate calmly, but without it, we stumble into chaos. This is often true of market turning points, as the emotional goalpost shifts so that high prices feel safe and low prices become dangerous. Our expectations push us into believing one extreme or another will continue. Clarity disappears and reality is solidified through confirmation bias. Reflexivity is paradoxical because certainty breeds uncertainty. When nobody believes something can happen is often when it does. But with awareness and tempered expectations, we can learn to see these intense moments as simple opportunities. In nature, our instincts are built for survival instead of profits, so we fail to see the best opportunities in the market. It's natural to resist buying when prices feel dangerous, as well as natural to hold on to assets that are continually going up in value. These instincts serve us well in most of our lives, but they tend to destroy us as investors. Rewiring our instincts is key to our success. Awareness of sentiment extremes can be found by paying attention to yourself as time passes in the market. You will see emotional patterns repeat that mirror the price action of the market. Maybe you always give up at the exact bottom or buy the exact top. Just take note of it. Over time, you can learn to recognize your specific emotions and know which path to follow. The way we place our bets is similar to the way we seek happiness or arrive at sadness in our personal lives. Often our idea of what will make us happy in the future is also a gamble on who we think we will become. We feel like we know ourselves, yet our journey through life bends our personality and reshapes our desires over time, so that when we arrive to the future version of ourselves, we discover a total stranger. Investing is a similar challenge because life and markets are reflections of the same dynamic, unpredictable swings between highs and lows that remind us that we have no control. Markets are simply a mirror to our collective consciousness. We don't always know how high the high, and we never know how low the low. Investing is like a wager on a prisoner's freedom, or faith in the artist's unseen masterpiece. The moment of greatest reward is found within the darkest moment. While we know it's always darkest before the dawn, it can be just as hard to be blinded by the light. When we arrive to either place, we lose faith in a reversal. When your psyche actually flips, it's likely an extreme, so it's key to take note of yourself. A lot of our life happens when we have no control. Major market pivots usually blindside people the same way car crashes unfold. We have time to see the situation, realize impact is imminent, and that it's too late to respond. Our paths are often chosen several steps before critical moments, so sometimes all we can do is watch the chaos unfold. If everything is unpredictable, winning is more about optimism. You can never be successful in anything without first believing there's a chance to succeed. When your mind opens to more possibilities, you will discover you can achieve anything. Determining what will make you successful requires understanding your hierarchy of thought. I visualize this like the early origins of a family tree. There are one or two priorities at the top, and the details follow below them. Everyone's tree is different, but everyone's most important thoughts create a path for the rest to exist. Sometimes we hyper-focus on the minor details at the bottom, and it causes our thoughts to loop in less important topics. So it can be important to know which thought tier you're focusing on, and to zoom out if you need more perspective. How important is the minor decision? Are your major priorities still in line? Some investors get caught up in the decision-making process and struggle to pull the trigger at all, because no amount of formal education and facts can teach the brain to fire the chemicals needed to buy an asset besides the act of buying itself. It's a different feeling for everyone because money is nothing to some and an existential threat to others. The paradox of the market is that it throws everyone into the same ring to fight. Even though you may buy the same asset as someone else, nobody is playing the same game. I believe what you invest in should mirror your own thought process and priorities. For me, that means going heavy with safe plays, but also adding smaller, riskier plays with less weight. It sounds overly simple, but by giving yourself more chances for success, you're more likely to succeed. Even with a portfolio of safe plays, investors need to be emotionally prepared for everything to go to zero. It's not that it will, but emotional management implies facing the financial risk before it's made and understanding the impulses that are driving the purchase. If an asset was bought out of greed, selling a low is more likely. If an investor is deeply in love with their asset, selling a high is more difficult. Emotions can push anyone to make irrational decisions at the worst possible moments, which is why it's best to accept the money is gone the moment it enters the market. In the end, your investing choices will force you to confront your own tree of thought. Where are your priorities? What do you believe in? How soon do you need a return? The answers will tell you how much to risk and how much patience you'll need to get there. We all set expectations, often unconsciously. We assume a simple task like taking out the trash will go smoothly until a frozen lid slows us down. The setback isn't the problem though, it's our expectations of how smooth the situation should go. So patience isn't about waiting, it's about reframing the situation. Patience is like a currency. Life is simply harder without it. It's valuable in finance because the banks that have survived the longest aren't always the ones with the most capital, but the ones with the most patience. Investors set timelines for profits, but if their window is too short, impatience unravels. Tied up money can feel lost, boredom drives sell-offs, and fear pushes capitulation at bottoms. Patience, however, can be learned through repetition and reflection that allow you to set longer horizons to smooth emotional whiplash. True patience also means accepting total loss the moment the money is invested. The art of patience is essential to learn because during the lows where your beliefs truly fade is often where your conviction in their original vision matters most. The opposite is true of a top. The moment you believe in eternal success is probably the moment you should sell. Remember what you feel and teach yourself to respond to your emotions over time. There are millions of indicators to use in the market, but perhaps the most useful one is an honest sense of yourself. Everyone's connection with the market is unique, so the clearest path to victory is your own, as long as you don't give up. If you can endure, you will learn how to operate, your tolerance to risk, and how to balance it within your life. You will learn when to wait, when to act, and discover when reflexivity is taking place. You will learn how to respond when chaos arrives, and above all, master yourself. The methods of winning in the market are endless, which also means they matter less. Popular voices insist their systems are the only way to profit, yet these people are paradoxical because nobody knows what will happen next. Still, they invite us to chase their shadows at our own demise. We pay our tuition fees in different ways. Bad trades, health worn thin from stress, energy drained by ups and downs, and time lost to misleading expectations. Fortunately, the game is not about perfection, but survival. There isn't a risk-free way to asymmetric gains. In the end, we're all layered, dynamic, and complex, just like the market. We carry our mistakes and victories each day, so naturally we hold different keys. Despite what has happened before, it's always possible to succeed. But without learning your own truth, all knowledge dissolves to noise. So if you came here for answers, I'm afraid you've been misled.